Central banks, such as the Federal Reserve, Fed, and the European Central Bank, ECB, wield considerable power over the global economy. Although they are supposed to maintain economic stability, their influence goes far beyond what is usually perceived. Let's examine their role and the hidden aspects of their power. The missions of central banks. Officially, their role is to regulate the money supply, maintain price stability, and promote employment. However, they also have a hidden geopolitical influence, especially when they make strategic decisions regarding interest rates, the money supply, and intervention during economic crises. Manipulation of interest rates. Central banks adjust interest rates to control inflation and stimulate the economy. By lowering rates, they encourage borrowing and consumption. However, this policy can lead to speculative bubbles, particularly in real estate and financial markets. Conversely, raising rates can lead to a recession, affecting households and businesses. Influence on currencies. Central banks also influence the value of currencies. They intervene in currency markets to stabilize their currency, making it more competitive internationally. This can create geopolitical tensions, as seen in currency wars, where countries deliberately manipulate their currencies to gain a trade advantage. Interventions during crises. During crises, central banks take drastic measures. For example, in 2008, the Fed launched a quantitative easing (QE) program, injecting billions into the economy to support the markets. While these actions helped stabilize the situation in the short term, they also exacerbated inequality and increased public debt. Similarly, during the COVID-19 pandemic, central banks increased their monetary support to prevent a major recession. But this inflated the balance sheets of financial institutions. The consequences of monetary policy. The monetary policies of central banks, while often necessary, have long-term side effects. Low interest rates benefit the wealthiest, who can borrow at low costs, but they also widen economic inequality. Moreover, governments are encouraged to increase their borrowing, fueling a vicious cycle of global debt. Central bank. Independence. Myth or reality? Central banks are supposed to be independent from political power, but this independence is often questioned. They are under pressure, particularly during economic crises or before elections, to adopt policies that benefit the economy, sometimes at the cost of long-term stability. Furthermore, the lack of transparency in these institutions raises concerns about their true independence and their connections with major financial corporations. Central banks play an essential role in regulating the global economy, but their hidden power has profound and sometimes harmful consequences. While they intervene to maintain financial stability, their influence is often subtle and difficult for the public to understand. The policies they adopt deeply shape the world. Want to discover the hidden secrets of the global economy? Subscribe and hit the bell to never miss out.